Okay, welcome. Disclaimer for you to read there. We are going to look at commitment of traders data for August the 21st, 2018, and just see what it can tell us about the markets and trading for this week. Looking at the net positioning of the speculators, we can see that the US index had a 3% increase, pretty considerable increase in long positioning last week. Emerging markets, the S&P, Mexican peso, commodities, euro, gold, all depreciating last week, or changing positioning to a more bearish outlook. The U.S. bonds, Canadian dollars, VIX, and yen are up. The pound down, and the New Zealand dollar, Australian dollar, and finally the Swissy having some strength last week. So, getting some signals of a risk-off environment here. Most dramatically from the S&P that was hovering around the 63, 70, 68 percent net long, which had a drop last week by over 10% in positioning. And we can just have well, not only the S&P, but we're getting bonds that are going up. We're getting the VIX fear index going up as well, and the yen and the Swissy also appreciating. Some of the commodities and emerging markets going down. All indications of a risk-off environment. The only sort of anomaly would be that the Comdolls had some strength last week, albeit not a significant increase for any of them, just a 0.5% to 1% max for them, even 0.24, almost not even worth calling that much of a change at all. So definitely characteristics of a sort of a cohesive risk-off move last week, which is quite interesting. And if we look at the table for the S&P, which breaks down the players and how they change their positioning individually, among other things, we can see that here's the four players we look at. We look at the long speculators and the short speculators, and we look at the long commercial players and the short commercial players. These two are grouped together because they have a shared outlook. These two are grouped together because they have a shared outlook. Due to the hedging nature of speculators. And we can clearly see here that the biggest, by far, move last week are short speculators piling on the positions, which even gives us more indication that this move is fueled by some aggressive bearish sellers. It wasn't profit taking, it was more bearish sellers jumping in. So in sight of all this, I think the best thing to do without any major change in overall positionings, we'll just have a look at the two risk currencies today, the yen and the Swissy, and see if we can, in case this is a true risk off move that's it's going to be fueled further, perhaps we'll see which of the yen and the Swissy what they're saying in terms of potential for opportunity. So starting with the yen, we can see in the table view here what I like to call a harmony move, and it's a consensus move amongst the players that I just noted before. So I said these two have shared outlooks, as do the spec shorts and the commercial longs have shared outlooks. So if they move together and in opposite directions between groups, then it's sort of a consensus move, and we can see exactly that for the yen for a bullish move overall. We have the speculators, the longs getting adding onto positions, the shorts speculators pulling back. For the commercials, we have the shorts significantly adding on, and we know that they have their hedgers. So if they're adding on, it's actually a bullish signal, whereas the longs are pulling back. So this right here is a very nice signal of yen strength last week, a consensus move, and it's sort of working in adding more strength to the risk off situation that we're seeing through the overall asset pricing throughout the market. Now, in terms of room to move, we'll just zoom in on the yen to see if there's some room here. So, looking at this is the commercial net positioning, and the blue is the speculator net positioning. And we know that the yen is net short about 30% there, so it's down in the negative, where the hedgers are in the positive territory. So we can see that the spread is sort of, looks like it's moving narrower, on its way moving narrower, and however, it's not at the extremes. You can see this is sort of the biggest extreme here, which followed a sell-off there, which would be Japanese strength. We can also see, looking at the 14-period standard deviation as well of positioning, that the red line being the spread, which is the difference between these two, is not at extremes. It's also sort of approaching average there. So there's room in the sense of the positioning. Similarly, for open interest, we can see that open interest is this red line right here, and it's currently somewhere around its average over the period here. It's not at any of these extreme levels, which would be up here or down here. Using the 14-period standard deviation as a look back, we can also see as well that it's approaching the blue line, which would be the median over the past 14 periods. So room in terms of open interest as well for Japanese shorts to get on board if they so desired in a risk-on environment, risk-off environment. The Swiss franc, on the other hand, we're not getting that pretty consensus harmony move that we saw in the yen. We can see that there are the significant player getting on board here would be the longs getting on, even though we did have some speculator shorts getting on as well. But the big move up in the Swissy this week was probably mostly accountable. These long players getting on board. So the question is the short positioning we've seen in the franc over the past number of weeks, is it at an extreme? Have the sellers that have been selling, are they are they exhausted, or is there room for more sellers to get on? And if we look at the open interest and positioning, we get a better idea of that. So here's the net positioning of the commercials and the speculators in blue for the Swiss franc. And unlike the yen, we can see that the spread between the commercials here and the speculators here is quite substantial. There hasn't been anything this extreme for quite some time. This spread here, we can see that when the spread does reach extremes, here's a extreme here, and you can see price made a high and fell. Similar here, this is extreme just after, price comes back down. Another extreme here, and this big sell-off here, and that's a sell-off in the US dollar, so that would be Swissy strength. So this is the USD CHF chart. So going down, that means that's strength in the Swiss franc. So here we had a number of weakness. As you can see, the speculators getting short, 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 and they are at extremes in terms of shortness. You don't need any indicator other than your eye to tell you that right now. And looking at open interest, we can see that with this big move beginning in February 20th, we can see that open interest was at a low. And fueling this move, open interest increased with the move. So sellers were getting on, selling the Swissy, selling the Swissy, selling the Swissy. Price peaked there, and OI peaked just after it. And that point is May 29th, peaking in open interest, and then it's selling, or open interest, probably some profit taking there as open interest closed or rolled back a bit, and is sort of level off here. You can see again we're at quite high levels, and we can see that we know that these were sellers fueling the open interest. We know that it's 10% short. We know there's a lot of sellers that got out on this move. Some got out here, and we know there's still a lot of sellers in this this trend. And looking over at the USD CHF chart, we can see that the, what did we say, it was the 29th, was this candle here was when we got our reading of the open interest peak. However, we're a week delayed, so we know that somewhere back here open interest dropped after this big move up. Open interest peaked and dropped off, and we can assume that that dropping off in open interest was a lot of profit taking of these people that got on this trend here. Now, so if we had some profit taking here, here's our first major low after that profit taking in this trend. So we know that everyone didn't take profits. We still have open interest that's very high, and we still have only 10% net longs in the Swiss franc. So we know that there's others that are still haven't been shaken out. However, this low, this first low after that first round of profit taking on this trend, is going to be quite significant, and we can assume that there's a number of stops that are built up here if they haven't got out already on this quick move down and the breaking of this trend line here. So it could be assumed that for reasons other than the yen, which has just seen some bullish interest with room to move, on the other hand, we have a situation where the Swiss franc could appreciate based on a big pile of shorts being shaken out of the game here if the risk trend continues. So that's all we're going to look at this week, and to recap, we have over the asset class, it's some detection of sort of some harmony in positioning for a risk aversion feel. And if we look at the try to position ourselves with the currencies, we can see that both the Japanese yen and Swiss franc could potentially move, but for two different reasons. If you want a big potential move, there's the Swiss franc with the stops below the major level we identified in the chart, and then the Japanese yen, which is getting some bullish pressure as well, or you could split your risk up between the two of them. However, we need risk catalysts to keep this, or to fuel those ideas, and that will come with in any possible ways this week. But if you have no idea what I'm talking about in these charts, there's some information on certainshieldforex.com site. You can check out some explanations of the charts. I'm going to post the raw charts in the posting on the blog of this posting as well, and you can follow on Forex Flows where I post charts and other stuff. And hopefully you found this useful, and I'll talk